Hi, so I just wanted to go over this challenging question. And there is a slight problem with the question too. So let's do it together. Um, in order to do this question, I highly recommend you get the handout from chapter one that has all our financial statements in it. We did a question with Dakota Company. So this question explores the interrelationship among financial statements. So having those financial statements handy really helps out, especially when we need to do an income statement first. So in this question, the bookkeeper is super dorky because she only knows part of the information, and that ends up being a real pain in the butt. So we know that our income statement is revenues minus expenses equals our net income. Now, the crappy thing in this question is that we only know that our expenses are $30,000. So that's going to go in there. And we might as well put it in here too. And then we don't know our revenue or our net income. So the only thing we do know that kind of pertains to net income, though, is that during year two, our retained earnings account increased by this much. So if we think about our statement of retained earnings, $15,050, was a product of our net income minus our dividends of 2,800. So notice you will have different numbers in here. It's an algorithmic question. So you'll have to deal with your own numbers, but the general core of the question stays the same. So I know that my net income must equal that $15,050 plus this $2,800. So my net income is the sum of those two numbers, 17,850. So that's the amount that will be the net income of my income statement. So now if we go back to our income statement, we know this amount, revenues, minus 30,000 equals 17,850. So here we go. If we take that plus that, 47,850. So let's try that. Our revenues are 7,850, and check my work. There we go. Okay, for this second part of the question, we need to look at our statement of changes in stockholder equity. But first, I'm going to go to our accounting equation because we need to find out our beginning common stock. And this dorky bookkeeper knew there were $38,000 in assets. So I've just put that in my accounting equation, 16,000 of liabilities. And then she knew there were 13,000 of retained earnings, but my accounting equation with that information doesn't balance. So I know we're missing a common stock amount. So let's figure out what that common stock amount is. So we'll take the 38,000 of assets, then subtract the liabilities and subtract the retained earnings. So we've got $9,000 in beginning common stock. So we're going to add that right there. I also know from down here that during the year, we issued $8,800 of common stock during the year. So we're going to add our common stock issued of 8,800. So there is our common stock for the end of the year. Now, when it comes to retained earnings, our beginning retained earnings balance was what was given to us, that $13,000. So then we already figured out that we added our net income of $17,850. Thank goodness we did that in the last round. Our cash dividends are subtracted out, $2,800. We're going to subtract our dividends. And so there is our stockholders' equity. All right, on to the next part of this question. So down here, it says we paid $11,000 to reduce the liability owned by the bank. So if we think our liability started out with $16,000, but we paid off $11,000, that means that our total here is going to be $5,000. So, oops, that's the total of those two amounts. So I'm going to fill in that liability amount, $5,000. Remember that we issued $8,800 of additional common stock. That was from the last page. If I had that up, I would be able to do that, but well, I do not. So that's $17,800 in common stock. The next part in our balance sheet. And then if we started out with $13,000 in retained earnings, it went up by $15,050, which is the product of that. That means our ending retained earnings are $28,050. And so our total liabilities in equity here, $50,850. So that's got to be what we have, $1,000 asset, which is cash. So our assets need to equal our assets plus liability. 850. What the heck is going on? All right. There we go. We have done this question. Well, I'm just going to grab this balance sheet for the next part of the question. And that's that percentage of assets. So where the heck did we get our assets from? So if we look at percentage of assets from creditors, come on, baby. Creditors, that's our liabilities, $5,000 worth of liabilities. So we'll take that $5,000 divided by our total assets, 850, and that's going to give us 9.83%, but we need more decimal places. All right. So when we're talking about our investors, they're talking about that common stock. So we're going to take that 17,800 and divide it by our total assets. again, we need more decimal places, damn it. Oh, it's 35%. There you go. There you have it. Who knew? And finally, from retained earnings. So we'll take that retained earnings amount of $28,050 and divide it by the total assets. This is getting kind of boring, but what can you do? We are doing percentages, man, and loving it. Yay, there we go.